The next 15 days could change everything for silver. Not months from now, not years from now, just the next 15 days. There are three big things coming together in such a short time that most people investing don't even see it coming. And when these things happen, the silver market won't have time to move slowly. It will jump suddenly, it will blow up, and the jump from $82 to $200, that sounds crazy right now, will suddenly feel like it's going to happen for sure. I'm not just saying big numbers to get attention. I am going to tell you exactly what these three things are, exactly when they are happening, exactly why they are important, and exactly how they could cause such a huge shortage that the price of silver doubles or even more in just a few weeks. This is not just guessing. These are real dates, official announcements, planned events, stuff that is going to happen no matter if you're ready or not. Hey, welcome back. If this is your first time here, hit subscribe right now, because what I'm about to tell you might be the most urgent thing I've ever shared on this channel. By the end of this, you'll know the exact dates to keep an eye on, how these things will push the price up, and what you might want to do before it's too late. This is real, useful info, not fuzzy guesses or maybe someday. This is going on right now. Let me give you a quick look at the three big things before I explain each one. The first one is the COMEX February delivery time, which ends in the next 15 days and is showing crazy high demand for actual physical silver. The second one is the Federal Reserve's policy announcement set for February 19th, which could cause a huge change in what people expect about money. The third one is the full start date for China's bigger silver export limits, which kicks in completely on February 25th. Each of these alone could push silver up by 10% to 20%. But they are not happening separately. They are all hitting in the same 15-day period. And when lots of big things happen at once, in a market that's already short on supply, the effects don't just add up, they multiply. A 20% push, plus a 20% push, plus a 20% push, doesn't make 60%. It makes 100% or 150%, because each one makes the next one stronger, causing people to cover their short sales, jump in to buy, and hold on to physical silver, which speeds everything up. Let me start with the first one, the COMEX February delivery period. This is the most complicated one, but it could be the biggest explosion. If you don't know how COMEX delivery works, let me explain it fast. COMEX is the main futures market for silver in the United States. Traders buy and sell contracts that stand for 5,000 ounces of silver each. Most of these contracts end with cash. Traders close out and take their money, profit or loss. But some traders, especially lately, are choosing to take delivery. They say, I don't want cash. I want the real silver. Give me the physical metal. When a trader does that, COMEX has to give them the silver from its registered stock. Registered stock is silver sitting in approved vaults ready for delivery on futures contracts. And here's the interesting part. COMEX registered silver is now around 28 million ounces. That's the lowest in years. It has fallen 70% since 2020. The vaults are emptying out. Now look at February. The February delivery time started on January 31st and goes until the end of February. From the latest numbers, over 7,500 contracts have asked for delivery. That's 37.5 million ounces of silver that traders want in real form. But there are only 28 million ounces in the registered part. Do you see the issue? Traders want more silver than is ready in the delivery system. How is COMEX dealing with this? They are shifting silver from the eligible category to the registered category. Eligible silver is metal in the vaults, but not set aside for delivery. It belongs to someone, but that person hasn't said it's available. To make eligible silver registered, the owner has to say yes, and they get paid extra for it. That extra payment is going up. The cost to change eligible to registered is rising, because the owners know people really want it. But here's the key thing. Even with these changes, the total silver in the vaults is going down. Every month, more silver goes out than comes in. The deliveries are emptying the system, and it's speeding up. February looks like it will be one of the biggest delivery months ever for COMEX. What happens if COMEX can't give enough silver? What if someone asks for delivery and they say, sorry, we don't have the metal? That would be a default. It would mean the exchange failed at its main job. Trust in paper silver would crash overnight. Everyone with futures contracts would hurry to get real silver instead. The paper price wouldn't matter anymore. Only the physical price would count. And that price wouldn't be $80 something. It would be $150 or $200 or more. Now, I'm not saying COMEX will default in February. The exchange has ways to stop that. They can raise margin rules to lower demand. They can offer cash instead, but at a higher price. They can get metal from LBMA or other places. But every one of those ways shows the market is under pressure. Everyone tells everyone that real silver is hard to find. And that message alone will push prices up. Keep watching the delivery numbers over the next 15 days. Watch how much registered silver goes down. Watch how many contracts ask for delivery compared to how many take cash. If deliveries stay high and stock keeps dropping, you'll see silver go over $90 and maybe hit $100 before the month ends. Now let's go to the second one. The Federal Reserve policy announcement on February 19th. This is just 9 days away, and the market isn't ready for what might come out. Right now, most people think the Fed will keep rates the same. Inflation hasn't gone down much. The economy is holding up okay. The Fed has said they will wait and see, so everyone expects no change. But there are more signs that the Fed is worried about the economy getting weaker than they admit. Jobs numbers are getting softer. The January jobs report showed slower hiring. Wages aren't growing as fast. People are spending less. The housing market is having trouble with high mortgage rates, and there's more stress in commercial real estate. Banks have loans to commercial real estate that are losing value. Some smaller banks are feeling it. Behind the scenes, the Fed sees data we don't. They see problems building in the money system, and they might get ready to change direction sooner than people think. A change doesn't always mean cutting rates in February, but it could mean they change their words. It could mean they hint that cuts will come earlier than expected. It could mean they admit the risks have moved from too much inflation to possible recession. Why does this matter for silver? Because silver is like money metal. It fights with dollars for people's investment money. When interest rates are high, dollars look good. You can get 5% in a safe treasury bond with no risk. Why hold silver that gives no interest? But when rates start falling, when the Fed makes money easier, dollars look less good. It costs less to hold silver instead, and more people want precious metals. Also, Fed easing means more money printing. It means more dollars out there. It means the dollar loses value over time. That's great for real things like silver, that can't be printed. Every time the Fed has made money easier before, precious metals went way up. From 2008 to 2011, gold went from $700 to $1,900, and silver from $9 to $49. From 2019 to 2020, gold went from $1,300 to $2,000, and silver from $14 to $30. The pattern is easy to see. Fed easing is like rocket fuel for silver. If the February 19th announcement has even a small hint of a change, any softer words, any sign that cuts might come sooner, silver will jump. The jump won't be slow, it will happen fast. Computer trading programs will spot the change in words right away. Big hedge funds will buy a lot of precious metals. The dollar will get weaker, and silver could go up 5% to 10% in one day. But there's an even stronger possibility. What if something breaks suddenly? What if the money system has a problem before February 19th? What if a bank fails or something bad happens with credit that makes the Fed act fast? In that case, the Fed might not wait until February 19th. They might announce an emergency rate cut or emergency loans, and that would tell everyone a crisis is here. People would run to real assets right away, and hard, silver would jump up fast and keep going. I'm not saying a money crisis will happen in the next 15 days, but the risk is higher. The pressure is growing, and the Fed announcement on February 19th is something that could start a huge move in silver even without a crisis. Even a small change in their words could do it. Now let's go to the third one, the full start date for China's bigger silver export limits on February 25th. This is the one almost no one is talking about, and it might be the biggest of all. On January 1st, 2026, China set new rules for exporting silver. Now only 44 companies can export silver, down from over 300, but that was just the plan. The real start has been done in steps. Companies got time to follow the rules. Old contracts already going, could finish. The full rules hit on February 25th. After February 25th, the amount of finished silver leaving China will fall a lot. Companies still sending under old contracts will stop. Smaller places finding ways around will get closed. Only the 44 approved big companies can send Chinese silver out, and those are mostly connected to the government. They will put China's own needs first over selling outside. China refines 60% to 70% of all the world's silver. They are the biggest in the supply line. When they limit exports, the whole world feels it fast. We already see signs of short supply. Extra costs for physical silver in Europe and North America are high. Sellers say it takes longer to get it. Factories using silver are rushing to get enough, and this is before the full rules start. After February 25th, the short supply will get worse. Buyers counting on Chinese silver will have to look elsewhere. But other places are limited. Mexico and Peru dig up a lot of silver, but they don't have the refining power China has. Switzerland has refineries, but they are already full. The United States doesn't have much refining setup. The supply system can't replace 60% to 70% of world refining just like that. What happens when people want more than there is? Prices go up. And when the shortage hits fast and hard, prices don't go up slowly. They shoot up. We saw it with rare earths. When China limited exports in 2010, prices went up 10 times in some cases. We saw it with palladium. When Russian supply got hit, prices doubled. Silver is next. The February 25th date is a real fixed thing. It's not a guess, it's not a maybe, it's a set start for a rule already said, and the market hasn't figured it in yet. Most people investing don't even know it's coming. When they find out, when they see supply fall, when they see extra cost jump, they will hurry to buy and there won't be enough silver for everyone. Now let me show you how these three things work together, because the real power isn't in one alone. The real power is them all hitting at once. COMEX deliveries are emptying Western vaults. The stock is at record lows. The system is under stress. Then the Fed says something about changing direction, meaning dollars will lose value and real assets look good. Investor demand for silver shoots up. People try to buy real silver, but then China's export limits fully start. The supply of finished silver to the world drops hard. Demand is going crazy at the exact time supply is crashing. In a normal market, this would take months to play out. Prices would move slowly, buyers and sellers would find a balance, but this isn't a normal market. This is a market with 66 paper claims for every ounce of registered silver. This is a market with huge short positions, all in a few hands. This is a market where real silver is vanishing and paper is growing. When these three things hit together, the market won't move slowly. It will break. The short sellers will have to buy back. But there's no silver to buy. The price will jump up big. Traders short will get margin calls. They will buy at any price to get out. That buying pushes the price higher. More margin calls, more buying. A squeeze that feeds itself and could take silver from $82 to $120, $150, $200 in just weeks. Let me tell you the exact dates to watch. February 15th is the middle of the COMEX delivery time. By then, we'll see clearly how much pressure the delivery system is under. Watch the registered stock numbers. If they fall below 25 million ounces, alarms will go off. February 19th is the Federal Reserve announcement. Listen to the words carefully. Look for any hint of a change, any mention of economic weakness, any sign that rates might drop sooner. If you hear things like data dependent in both directions, or balanced risks, or prepared to adjust policy as needed, those are secret ways to say a change might come. February 25th is the China export limit full start date. By then, you'll see the real effect of the limits. Watch extra costs for physical silver in Asia and Europe. Watch reports on dealer stock. Watch what factories say. If extra costs jump and wait times get longer, the supply shock is real. And watch how the price moves through this whole 15-day time. Silver is now at $82 to $83. If it goes over $90 strongly, that's a sign the things are starting to hit the market. If it goes over $100, the squeeze is getting faster. And if it goes over $120, the old all-time high, we're in new territory. The road to $200 will be open. What should you do with this info? First, know this is a chance that won't last. These things have real dates. Once they happen, the easy gains will be over. If you want to get ready for this move, do it now, not next month. Now, second, figure out how much risk you can handle. If you're careful, buying real physical silver is the safest way to gain. Yes, extra costs are high now. But if silver hits $150 or $200, that extra you paid won't matter. If you're bolder, think about mining company stocks or options for bigger gains. But no leverage goes both ways. You can lose fast if the timing is off. Third, have a plan for ups and downs. The way from $82 to $200 won't be straight. There will be drops. There will be days it feels like the idea is wrong. Don't freak out. The basics are still good. The things are real. Ups and downs are what you pay for huge wins. Fourth, ignore the chatter. Over the next 15 days, you'll see scary headlines. People saying silver will crash, regular news calling it a bubble, banks putting out negative reports. They don't see what we see. They don't get these things. And a lot of them want prices to stay low for their own reasons. Think for yourself. Watch the real numbers and decide on your own. The next 15 days could change your money future. 3 big things are coming together. COMEX deliveries are emptying the vaults. The Fed might change direction. China is cutting supply. Everything is set for a huge move. The only question is if you're ready to gain from it. Subscribe to this channel. Share this video with everyone who should see it. Drop a comment with what you think about these things and how you're getting ready. I read every single comment, and I will see you in the next